I've caught more high probability S&P setups using heat maps than I ever did stacking a bunch of indicators on my chart. This is because heat maps show you exactly where liquidity, think of that as trades and participation, is concentrated. And liquidity is where price goes. After decades in the market, this is one of the clearest edges I've found for anticipating moves before they happened. And most people don't really know how to use them. So today I'm teaching you how to use them in under 5 minutes. A heat map is a visual map that shows where traders have open positions right now. Let's say you open a trade on the S&P futures. Then you will appear on that heat, in essence, at the price you entered. The more of these buyers, the more that heat map lights up. Now, when thousands of traders have similar levels stacked at the same price, that zone lights up on the heat map. It could be selling pressure, it could be buying support. The brighter the color, the more traders are sitting at that level or in that stock. Okay, let me show you how they work. As the S&P moves, traders are constantly opening long and short positions. Each of those positions has a liquidation point, the price level at which they're forced out. So liquidity acts like a magnet. When there's a massive cluster of stops or liquidations at a specific price, the market is pulled towards it because institutions need that liquidity to fill orders. Or as one of my mentors once said, the market moves in the direction of the most stops. The good thing is for us traders is that the heat map color codes these zones, making it easy to spot where the S&P is most likely to pull back next and where potential reversal points might be hiding. Cool colors like blue or purple show low liquidity zones. These are vacuum areas where price can rip through fast because there's nothing to absorb the move, no size. Warm colors like yellow, orange, and red are the zones of liquidity. These are massive concentration of stops and liquidation stacked all at one level, acting like a wall or a potential explosion point. Here's a tip. Try to watch how these clusters evolve, which to say they're not fixed, they're always moving. If a bright zone moves higher as prices rise, it means traders are moving their stops, and that's a hint of a sustained trend. And if a hot zone, that warm yellow, orange, red, vanishes as price gets close, it was probably fake liquidity, meaning it was just bait to real retail traders in, but then it got pulled. So how can you use these liquidation maps for your trading strategy? First, you need to combine the heat map with other confirmation signals. You simply don't trade the heat map alone. So let me give you some combinations that have worked wonders for me over the years. For day traders, if price runs into a hot zone and you see tons of selling, so at that red level, and the price doesn't fall, someone big is quietly buying everything that's being sold. They're absorbing that liquidity. You can either enter long with a tight stop below that wall, or that support level, that floor, however you want to imagine it, because institutions are defending that level. For swing traders, use the heat map to confirm trend direction. If the point of control, which is the area with the most volume that's been traded thus far, is migrating higher over days or weeks, only look for long entries at the cool dips on the heat map. Remember, cool is a low liquidity level. If you're making sure you're buying pullbacks in a confirmed uptrend, you're on the right track, because guess what? Now you're buying the dip with institutions. Let me give you an advanced move, fading trap zones. When you see a cluster of buy stops stacked just above resistance, this is where institutions love to pull price, trigger those fake breakouts. And once that liquidity gets absorbed, gets grabbed, they reverse hard. There's nobody left. There's no reason to keep it going because there's no size. That is your short entry. And you target the liquidation zone on the opposite side. So imagine everyone else buying into a breakout, but in reality, it was oversold. It was a resistance. It was a liquidity grab, and price went right back down into the range. But here's a word of advice. Heat maps are not perfect. Nothing is. Always watch for spoofing. This is where fake liquidity gets pulled right out of sight before price arrives. Again, it's like bait. Also, not all stops show up on the maps. Some traders use mental stops or option hedges that won't appear on the map. The heat map shows you where the S&P is magnetically pulled. And our job is to confirm that pull with structure, volume, and most importantly, trend context. But here's the thing. Heat maps are an important piece of a much bigger system. And if you want help putting all the pieces together in real time, that's where my live trading community comes in. I'll review your setups, I'll show you my setups, show you what you missed, show you what we're looking at, and help you see the market in the way that an experienced trader and institutions do. Because becoming profitable alone by watching YouTube videos is not enough. I can tell you that. There's details in the description. And if you want to keep leveling up, the next video is already queued up. Check it out, and I'll see you soon.